Welcome back to Freedom Finance with Lanny, guys. Thanks for rocking with me on a late night video. And today's video is really going to be about my investment allocations, specifically talking about my taxable stock account. Again, I've been investing for 15 years and I'm trying to be as transparent as possible to help you, either new investors, senior investors out there, kind of what I'm doing on this path to hopefully financial freedom here as I've been building wealth and been investing in the stock market, which obviously the returns speak for themselves with how well the stock market has performed, which is why I choose that as my main investment avenue to financial freedom. So again, I've got a lot going on within my, transition to what I want to be my taxable stock account. So I'm going to hit it in this video, kind of like the reasons why I'm transitioning the portfolio, not going away from dividend investing. So don't you guys worry, guys. But I do want to dive into what I plan on doing. You've seen it in previous videos, but now I'm going to just really break down the reasons why. And it really comes down to personal finance in this situation, guys. So grab your favorite nightly beverage, your beer, your liquor, your wine, decaf, or you can still do a little shot of espresso because you're Italian this weekend, baby. And let's dive into how my investment mix will look hopefully going forward. Let's dive in. All right, so guys, to get in here, again, I've been investing 15 years, 15 long years, 15 learning years, really at the tail end of the first financial crisis, obviously through the 2010s, through COVID, and here we are in, I guess you can call it, closing out the third quarter of 2024. And, it's no lie that I have just too many individual stocks in my portfolio. I believe I began the year over 70, and now I'm in the lower to mid 60s from an individual stock position. So it's no surprise to you, hopefully the community, that I've been trying to simplify the portfolio by reducing the number of individual stocks I own. Now, that doesn't necessarily mean I'm going to allocate the proceeds from individual stock sales that, again, don't align with the portfolio. I spoke on the reasons why I would sell a stock, so check that video out, for me at least. So I would have an option with the proceeds. I can either hold it in cash, which I usually try not to do, reallocate it to other undervalued stocks that I do own, or the set it and forget it ETF strategy. So you've already seen that I'm trying to reduce my number of stock holdings. Now, I'm also been looking to increase, again, the allocation to exchange traded funds, or ETFs, guys. You already know it by now. Over 1,500 shares of Vanguard's high dividend yield ETF in this guy's portfolio, well, between my wife and I, because we've been investing in that ETF for 4 straight years, every single week. And I buy Vanguard's S&P 500 VOO every single day, and Vanguard's Dividend Appreciation ETF, VIG, every single day. Use the SoFi investing app. Again, link below is in the description. No pressure, but it makes this part so easy for me because I set it, forget it. It's all automated, zero cost, obviously. And if you sign up, you get some free stock. But I've been trying to increase that exposure to ETFs, still trying to get an above average dividend yield with above average dividend growth with above average returns in the investment, phase. And, it's more of like, well, what am I trying to do here? Well, I'm not trying to go balls to the wall with, the S&P 500 and have that be everything, right? Because I'm trying to retire early. I'm not saying you can't go about it that way, because you can obviously sell shares of what you own to live off of those proceeds or distributions. Instead, because I'm Italian, I want to be an owner. I always want to own. I never want to sell. So I'd rather live off of the passive income. So you need the income sooner. So that's why I've been doing more individual stocks and obviously VYM's, Vanguard's dividend yield ETFs, because obviously I think is about 2x what the S&P 500 yields. So building up the current income so I can retire sooner than later, guys. So as I'm getting older, again, I got some gray hairs. You probably can see them by now, especially with these new phones that come out and the new video equipment. HG just gets clearer and clearer, guys. But no, so, my family, I've got a little one. We may have another one coming on the way. And, as I'm going through this, it's like, how much time do I have to spend looking at 60-something individual stocks? It's obviously getting slimmer and slimmer. How much risk am I taking for our family? And, again, it just takes a lot of time to stay on these positions. And it takes time to say, okay, does it still fit my strategy? I have plenty of stocks that I can argue that it doesn't, and we'll get into even some of that. I talk about it more often on this channel than anybody normally would. Again, the bad stock moves. So really it comes down to why I'm doing a transition into higher allocations into ETFs. Again, not saying I'm not buying individual stocks. Heck, I did buy PACCAR, PCAR, so you better believe it. I put my money where my mouth is. But I'm trying to invest more into ETFs to scale it, right? And maybe your question right now is what's my current allocation? Well, right now I'm only 22.4% ETFs, but it is slowly growing week by week through all my investing of VYM, VOO, and VIG. So 22.4%, and then I've got the remainder 77.6% into individual stocks, guys. So again, heavily into individual stocks. And my goal, I guess you can call it like medium-term goal, because it's going to take well over, a year to 2 years plus to get there, is to get that to 50% ETFs. Now, again, I've got a bunch of stocks on the chopping block, which I'll get into, but, I've got 3M company because they've kind of risen back up. And to me, it's like you've cut the dividend once when you spun off Solventum. You've had a lawsuit that was pretty, severe to the company. And you're finally above a price where, I could probably walk away with a little bit of an unrealized gain, but not much, or a realized gain at that point. Paramount, obviously that's a stock that's been a dog dragging down my portfolio for the last couple of years. And these merger talks and merger, closures are not making things any better. And then the other head scratcher still in my portfolio was the spinoff from AT&T, Warner Brothers Discovery, WBD. Again, that stock just can't catch a break as it hangs around $7 to $8 a share for I feel like all of eternity at this point. So I'm staring at a large unrealized loss in that place. And then there's other stocks where you don't think it would happen, even to dividend kings or dividend aristocrats, such as Walgreens Boots Alliance, WBA. But that stock obviously cut their dividend and they've just been a dog. Who knows what's next for them? And then obviously the struggling Intel, ticker symbol INTC. They had a dividend cut. Now they're pausing or suspending their dividend, obviously because of the cash flow and operational concerns, guys. And there's a lot worse going on with that company. And that was actually one of my longer term holding companies. Probably over 12, 13 years I've owned Intel. Surprisingly, still in an unrealized gain on Intel, even if they're trading at below $20 a share. That tells you how long I've owned them. So I have these, not to say bad investment moves, but it's maybe I was good at buying it when I bought it, because obviously I'm still in an unrealized gain on some of these stocks. But maybe I'm not the best at exiting a stock. So how good am I? And do I have the time and ability to even get better? I think Warren Buffett and J.L. Collins and all of them said the rest. You can beat the stock market average return a few years, but to do it for a long time period is difficult to do. So that's kind of where I'm at with it. Is not to say I'm not good, because I've made some great investment moves along the 15 years, but it's how good can I be going forward. Not to say, again, I doubt myself by any means at all, but I mean, to keep making investment moves now, I'm great at making it maybe on the buy side, but on the sell side, maybe I'm not so great at it. And that's where ETFs, I feel like having an increased exposure to that will help limit the risk of what I'm holding in the individual position, for my taxable stock account. So that's where I'm at with it, guys. Again, I'm trying to transition that portfolio by Again, I still have a goal. Maybe it won't happen by the end of the year to get to 50 positions. Again, I'm still in the 63, 64 range right now, so I still have a long way to go. So it's to exit individual stocks that don't fit, reducing the number of individual stocks I own, and then increasing the ETF exposure to that 50-50 safe place where I would feel a lot more comfortable with my time and where I want to focus my time kind of going forward as I manage, you can call it the family portfolio here, you know what I mean? And again, I think the biggest key piece here as you guys are on your own investing journeys is figure out your why. Why do you want to hold it? And then tweak your strategy towards your personal self, your family's sake, and all of that, just because at the end of the day, that's the beauty of personal finance. Not one strategy fits everybody, because if it did, there'd be one ETF and we would all just invest into it, right? So let me know what you guys think on that. And I would still argue that the best thing you can do is save as much money as possible and put it in the equity market or some other market outside of cash, because long term, most assets perform far better than sitting in cash, and one being the stock market. Again, biggest takeaway is your ability to save and then to do what's best from your personal finance situation that aligns with your comfort, aka risk, your investing time horizon, and your goals. So let me know what you guys think about this video. Again, I wanted to get something out there that's been on my mind for not just a week, but probably for the last 6+ months, guys. Curious on your feedback, and hopefully this helps you. Maybe it causes you to think just a little bit about what you're currently doing with your investing strategy. Again, make it purposeful with what you're doing with your hard-earned money. Again, I'm all about taking the one-time income to buy forever income, and I'm going to continue to do just that, guys. So like the video, subscribe to this channel, especially if you like this heart-to-heart, unscripted, video here that I keep bringing to you every single week. At least I try to, guys. And yeah, have a great start of the week, and I'll catch you on the next one.